Good afternoon, everybody, and welcome to this week's macroeconomics analysis session for November the 20th, 2015. DMAC with you this afternoon. Jeff Safra taking a little bit of leave today, so flying solo. So let's get underway. And as always, our disclaimer: the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, your financial situation, nor particular needs. So, as always, before making an investing decision based on the general advice presented in any of our presentations, please consider whether that advice is appropriate in light of your financial circumstances, or seek further advice on its appropriateness. All right, let's get underway and have a have a bit of a look at the week in review. This last week, it all seemed to be about monetary policy, meeting minutes in a number of countries. So the first one there in Australia, the RBA minutes, and basically from the minutes, the key messages were really that growth in the Australian economy is going to strengthen gradually, which I guess is something that we sort of expect, keeping our fingers on the pulse as much as possible. Obviously, we've got low inflation at the moment, but the RBA is still in a position where they can ease rates if they need to at this stage. They're not inclined to do so at this point in time, but they have mentioned, obviously, that the slowing in some of the emerging markets and slowing in Asia is perhaps one area of concern for them, but in particular in China. But for the time being, their appetite, if you like, for further rate cuts is fairly small at this stage. Obviously, last week we had good employment numbers, so it'll be interesting to see next time we get those numbers as to whether that trend is continuing. But also just noting that perhaps general confidence had picked up since we've had a change in leadership, with Malcolm Turnbull taking over the reins from Tony Abbott. In Japan, key messages to come out of that particular country. Obviously, there's a slowdown in emerging markets at this point in time, and that's having a bit of an impact, obviously from Japan exporting a lot of goods, etc. And so, business investment has been increasing in Japan over the last little while, which is a good sign. But those slowing emerging markets, if you like, is having an impact on exports from Japan. Domestically, their spending over there is pretty soft, and they've got some figures coming out next week, which will be quite interesting to see what happens there. But certainly continuing their current rate of stimulus. Has been no changes to that at this particular point in time, and I think there's some inflation figures coming out next week, which they'll be looking at with interest as well. Out of the US, probably the important one here, the FOMC minutes at this point in time. It's interesting, most of the FOMC officials believe that the economic conditions over in the US are strong enough for a rate rise. So that'll be quite interesting, and there was actually even some chat this week from, I think, one of the very senior members of the FOMC that was almost alluding to some major economies, major central banks potentially looking to raise rates. So if they weren't talking about the US, I'm not too sure who they might have been talking about. In the Eurozone there, sentiment improved for the first time. This is in a German economic sentiment indicator there. It's the first time in 7 months that this figure has actually improved. And that's also in light of the recent terrorist attacks as well. So certainly that's a good sign for Germany in particular. The broader Eurozone economic sentiment is still quite weak, but at least Germany being the heartbeat of the Eurozone there, picking up over the last little while. So what we might do now is go through and have a bit of a look at the markets there. Two key markets there, obviously the XJO and also the S&P 1500. You'll see there that we are still down in very high market risk. Our stochastic indicator, the worm down the bottom there, again, it's lagging. We've had 3 strong days on the market. Be interesting to see what happens by the close of the market today, whether we can get back up to this, what has been an old support level, has provided a little bit of resistance in the past. And again, you need to remember that these areas, they're not paper thin. They're zones of demand and supply. Certainly nice to see a bit of strength in our market. The financial sector recently been quite strong. A lot of banks moving up over the last couple of days, giving the market a bit of the boost. Obviously, our commodity prices, iron ore being hit largely, the miners really not doing much of the lifting at all, and really that's the kind of the ball and chain around the ankle of this market for the time being. But having said that, there are still some stocks that continue to perform very, very well. Some stocks that, in particular in the Elite Investors Club that Jeff has picked up over the course of the last 12, 18 months, some even in the last 6 months, that haven't quite met the very stringent price action criteria that we use as part of ETC for our setups, but certainly have proven that rising troughs and good relative strength can be used as some broad basket metrics when looking at some stocks on a fundamental basis to help with your actual timing of how you might like to enter those particular stocks, and keeping in mind you absolutely the risk management side of the equation. So knowing where to put your stops is really important. But just on that note, I did run a education session on Wednesday afternoon on that specific topic, how you can use technical based indicators to help with your timing on the assessment of your analysis that you've been making on a fundamental basis. So those of you who have had some words to you, it might be your stockbroker or somebody suggesting something to you that fundamentally is good, then what I've done is provide a bit of a guide as to the things that you should be considering, the key criteria you should be considering before just jumping in on the basis of a fundamental based decision. So certainly that's in the education portal. So go and have a look at that and see what you can learn from those specific criteria. So that's the XJO at the moment. Let's go across and have a look at the states there. And again, the market has really ripped up high since the catastrophic time with the increase in volatility at the end of August, and really just moved up extremely quickly, and really probably did need a bit of a retracement of some sort. Any retracements on the way up had only been very, very minor indeed. So again, sort of testing this 470 type of level in here at the moment. A couple of strong candles over the course of this last week. A little bit of indecision there last night as well. And I think the next few weeks are going to be pretty important in terms of what news comes out of the economy in the US as to whether they do go and raise rates in December or move it into January. For the time being, we're still in moderate market risk over there, but this week has been pretty positive for a lot of stocks in the portfolio, which is pleasing. Stocks that were looking a little bit weaker now starting to regain a little bit of strength, which is good. All right, so let's pop back into our screen and have a look at what news is coming out this week. So next week in Australia, Governor Stephens is going to speak, and then on Thursday we've got private capital expenditure to see what businesses are looking to, what they have been spending up to this point in time. So hopefully some of that business confidence will filter through, and we'll start to see that coming through in consumer confidence as well a little bit further down the track. In Japan, interestingly, next week we've got core CPI coming out and retail sales. Certainly retail sales have been a bit weak in Japan of late, so it'll be interesting to see whether that trend turns around, and seeing what inflation is doing on a year-on-year basis as well. Obviously, there's zero inflation over in Japan at the moment. They've had low rates for a long, long time. So that'll be interesting to see whether or not any indicators there just tick up slightly to see whether there's some inflation coming through. Over in the US, there's a fair bit of data coming out of the US next week. Now, there is a Fed announcement on Tuesday. Now, these Fed announcements are pretty arbitrary. They're random in when they come out, and they typically take the opportunity to just decipher some information, explain sort of what they're thinking at this point in time in terms of policy and those sorts of things, just broad-based statements. So that'll be coming out on Tuesday. That will be quite interesting to see whether or not we get the same sorts of themes that have been coming through of late. You'll see there the image there, Stan Fisher, Vice Chairman of the Fed there, and he hinted on Thursday, that's last night, that some major central banks could move away from near zero interest rate policy in the relatively near future. As I said, if he's not talking about the US, then who is he talking about? I'm not too sure. Another comment there, we've done everything we can to avoid surprising the markets and the government when we move. And so there's been a lot of talk for a long, long time about interest rates, and we're going to move. We're not too sure when. We might do it this month. It looks like we'll do it this month. No, we won't. And so that's caused a bit of uncertainty and obviously a lot of volatility when mixed with other global bits of news. For example, data out of China at the end of August, coupled with the fear of the rate rise, etc. Really created massive volatility. So, look, the sooner they get this over and done with, or the start of it at least, the sooner that the markets can come to grips with it. I'm sure there'll still be some short, medium-term volatility when it first does happen, but then things should settle down after that, I would expect. Next week, obviously, preliminary GDP is going to have a big impact. Consumer confidence and flash PMI on Thursday, and it's all data that if it's positive and if the trend is upwards in those areas, then I think that's probably going to be the last bit of ammo that the Fed needs to make a move pretty soon. And in the Eurozone, we've got flash PMI, manufacturing and services PMI coming out next week. So there you have it, the macroeconomics analysis session for this particular week. I will be running a Trading Plan Plus workshop up in Sydney this weekend. So those of you that are coming along to that, look forward to catching up with you. But apart from that, we will catch up with everybody on Monday morning at 9 a.m. Eastern Standard Daylight Savings Time. In the meantime, have a good weekend and bye for now.